The S&P 500 took a brutal hit last week, while seasonality, bearish divergence, and overbought sectors add additional downward pressure. But it's not all bad news for you permabulls out there, as small cap stocks continue in their uptrend. We'll discuss all of this, do a quick update on our Hecla trade, and leave with two new small cap trade ideas. Let's jump in. On Thursday, we saw a huge sell-off of the S&P 500, and it was blamed on artificial intelligence replacing everybody's job in the white-collar workforce. Of course, it wasn't the 270 days of bearish divergence we've been watching, or the fact that it's one of the weakest parts of the year, seasonally speaking, or maybe the fact that we've never in 35 years seen 6 of the S&P 500 sectors extremely overbought, while the index remained neutral. No, it wasn't any of that. Of course, it's AI taking over the world. Friends, this was a reactive response by the news media instead of being predictive, or better said, forecasted. Let's take a look at what actually is happening here. On the S&P 500, we've been watching divergence. This is the 270th day where we've made higher highs on the S&P 500 and lower highs on MACD. That is a problem. For several weeks now, we've said this does need to resolve itself. I just don't know when. Bearish divergence never comes with a timer. It just comes with a forecast. It says things are not looking good. So then we turn our attention towards other things like seasonality. Let's take a look at that. We are currently this week 18 out of 100 in terms of best periods of the year, or you might say 18th percentile out of the year for this week of trading. That's not very good. How about the month? 25th percentile. How about 3 months? 21st percentile. Bottom line is, it's not the best time to be a bull. Let's take a look at a composite chart, the last 10 years of the S&P 500. You can see, generally speaking, the market went up into February, and then mid-February, it turns around and sells off. And then we head on up for the end of the year. This is the aggregate of the last 10 years. Additionally, we're also in a second year presidential cycle. This blue line has tracked the second year of presidential cycles, and you can see the blue line, we start off here and we go up a little bit. It looks a lot like the composite chart, but then around day 63 or so, it sells off into support, and then of course we run up into the election. This happens so much that it's a thing that people watch and track, seasonally speaking. In addition to all that, we looked last week at these 6 sectors in the S&P 500: consumer staples, energy, industrials, materials, real estate, and utilities. And we said these are all extremely overbought. And notice, even with the sell-off last week, only industrials and materials came back within the Bollinger Bands. The rest of these are all still overbought. Real estate, utilities, all overbought. And what that's doing, in my opinion, is leaving some dry powder for there to be continued downward pressure on the S&P 500. You can see all of these pieces coming together as the sectors are overbought. We've got bearish divergence. We've got seasonality adding downward pressure. It makes a lot of sense that we would continue through with a little bit of bearishness going into the future. Now that leads us to our small cap stocks. Small cap stocks have been the unsung hero the last several trading weeks. You can see there's no bearish divergence here. While this index continues to make higher highs, MACD continues to make higher highs. That's great. We want to see the two of these walking together, hand in hand, if you will. In fact, if we look at the small cap stocks, ticker symbol RUT, and compare it to the S&P 500, you can see that as this chart makes a bottom here, this is where small cap power started to kick in. Our small caps have been outperforming their bigger brother since the middle of 2025. That's what led us to a trade like Hecla, ticker symbol HL. We did this in the last market forecast, and it made up a little bit for our Credo trade that went straight to target in 48 hours. We got into this trade and it went down. It was testing our patience a little bit with our stop, but then on Friday it's popped on back up, and I'm optimistic that it will continue on. We share all the trade updates here, the good, the bad, the ugly. Generally, they're really good, but here's one that didn't go quite as fast to target as I would hoped it would have. Now here's a couple trade ideas to leave you with. Let's go to ticker symbol AV, or Aero Environment. This stock has been remarkably consistent with its support around $235 or so. Here's one. If we pull up our stochastic oscillator, this gives me an idea of when stocks are what I call on sale, or they're trading at a little lower price than they typically do. And stochastic being below 20 here with arrow environment right at support, I think there could be opportunity for a bullish trade. I've got it marked up on the screen here. I'd get my stop down around $217, and the upside potential for this is bonkers. I won't let my trade go that far. I'll be putting cash in my jeans along the way. But if you're tracking ours, this is over a 4R potential trade. And that's because our position sizing can be so aggressive with this stop being so well defined. Take a look at AVAV. Next, let's take a look at ADPT, or Adaptive Biotechnologies Corporation. This stock has been in a remarkable uptrend. You can see since 2024, it's gone up. I'd like to shake the hand of this CFO. He's done a great job managing the value and the expectations for shareholders. Additionally, this is a Fibonacci pullback. If you want to learn more about Fibonacci analysis, come join us in Power Trader. I'm going to be doing a full markup on this. But for now, I would take a look at this, putting our entry somewhere above Friday's candlestick, or maybe right at the high from Friday. And I'd put my stop just below the rising trend line. Your target will be a recent high up here around $19 or so. And while this is only a 1R trade, it's still not a bad trade idea. I'm pretty optimistic with this uptrend, and Adaptive Biotechnology is also a small cap stock. So I'm holding out for our small cap brothers to continue doing well as the large cap stocks stumble. I want to give you a quick thank you for everybody that watched our video on Thursday. Over 862 views as I'm recording this right now, which is amazing for this tiny little channel of ours. Thank you guys for trusting us with your market forecast. I hope you're finding real value. I'll put a link at the end of this forecast to a video I just recorded that talks about how and why we teach people how to trade the stock market. I think you'll find it interesting and valuable. Until I see you again, blessings and favor on your trades.